Right now, you have to sell every single one of your tech stocks and cash out on your profits before it's... If you've been following the stock market, then you've probably seen it all. Tech stocks soaring, tech stocks hitting new records. Nothing can get in the way of tech stocks. And it might be very reasonable for you to be thinking there's gonna be a crash soon with these tech stocks. Or you might be confident that this momentum will just keep going. In this video, we'll be going through 1, what is going on with tech stocks? 2, is there a tech stock bubble? And 3, what I think you should be doing in this situation. As always, these videos are for entertainment purposes only, so please do your own research and due diligence. Alright, so let's go into what is actually happening with these tech stocks. Through this pandemic, tech stocks have been going up insanely, reaching new records as this pandemic has been forcing us to live digitally. Netflix saw 10 million new subscribers, which is a quarterly record. Amazon's sales went up 40% year over year. Tesla sold over 90,000 vehicles in second quarter alone, surpassing many expectations. And the list goes on and on. Now, if we take a look at the whole market, we can see that the Nasdaq, which is primarily composed of tech stocks, has been crushing it with over 25% gains year to date, while the S&P 500 and the Dow Jones are very close to where they started. I know what most of you guys might be thinking right now. Is there a tech stock bubble? Sad to break it to you, but I can't say for sure if there's gonna be a tech bubble or that we're gonna have some sort of crash. But based on the data, there are some things that we should be concerned about. There are 4 things, and the first one is valuations. Some of these tech stocks are valued at their all-time highs. These are some crazy high valuations. And remember, if you are a long-term investor, valuations play a very big factor in what kind of returns you'll be getting. If you're more on the short term, then valuations won't mean as much to you. And when we look at what happened in the past when these historically high valuations occurred, it took over 15 years for stock prices to recover. Imagine how crazy that would be if that were to occur again. It's like you buying Tesla stock right now for over $2,000, and considering that most of you guys will be around age 25, when you're 40 years old and your son asks, "Dad, how much did you get Tesla stock for back then?" And then you're like, son, did you eat breakfast? Now, I'm not saying this will happen again as things are very different, but it is something for you to consider. Now, the second thing to look at is to see what company executives are doing with their stocks. Since these executives have more knowledge and insight into how their company is performing, since they're the ones making decisions, they might have a better idea on how their stock price will perform in the future. When we look at what executives are doing with their stocks, tech had the lowest buy to sell ratio at -7%. This means that executives are selling a good amount of their stocks. Just in June alone, 24 million shares of tech stocks were sold. Now, when this happens, it definitely can mean that executives aren't as confident about their stock price because it's trading at a premium. But there are many other reasons that this may also happen. They might be pulling out some cash to fund another project or for some personal reasons. So although it is definitely notable that the tech sector had the most sell-offs, it's not something we should jump to conclusions on right away. Personally, for me, I think it's better to focus on insiders buying their stocks as a sign of confidence rather than insiders selling as a bad sign. So the third thing to look out for is market concentration. Right now, investors are either very optimistic or very pessimistic. They're optimistic on things related to tech, while very pessimistic on things like retail, restaurants, tourism, and anything that's not at all related to tech. And because of these extreme views, There's not much middle ground to see things rationally. With sky-high valuations, high expectations have already been priced into these stocks, so a little bit of bad news can hurt these prices significantly. Now, I'm not saying there will be bad news, but if there is, stock prices will fall a lot more than usual. And if we think a little bit into the future, after a vaccine is fully developed and distributed, things could change a lot potentially. E-commerce sales can slow down after people are able to shop more freely at physical stores. The government will stop funding trillions of dollars into the economy, and they might actually create barriers to growth. And we may see a lot of rotation money within the stock market. And I think there's a good chance that rotations might happen as investors and fund managers take out their money from extremely high valued growth stocks and put them into more value stocks to get their returns for their investors. The fourth and last thing we need to look at are tech earnings, and more specifically, where these earnings are coming from. Yes, it's true that tech companies have been surpassing analyst estimates for earnings, but because of the non-physical nature of technology, these products and services can be used from anywhere around the world. People all over the world are using Facebook, Instagram, Netflix. Some of you guys might be watching this video from outside the US. And because of this, tech companies are able to deliver earnings that seem to be very high considering today's US market conditions. If we take a look at this chart at some of the biggest companies in the US, you can see on the very right, it shows the percentage of revenue coming from outside the US. A lot of these companies here on this list are tech companies or tech related, and they have a huge amount of internationally driven revenues. So despite the hardship here in the US, these companies can still excel as they are less dependent on the US economy. But this also means that these tech companies won't see as much benefit when the US economy improves. But on the other hand, if we look at companies that are more physically based in the US and more dependent on the US economy, like restaurants, these companies are likely to see a lot more benefit from the US economy improving. So with all that said, here's what I think that you should be doing. Right now, you have to sell every single one of your tech stocks and cash out on your profits before it's too late. Alright, I'm totally kidding. Please do not do that. In no way am I encouraging you to sell all your tech stocks. In fact, I personally believe tech stocks will continue to go up in the long term. But hypothetically, let's just say that I'm currently sitting on massive amounts of profits from investing in tech stocks. Even still, that doesn't mean that I should automatically go and sell all my tech stocks, because there's no way for me to fully predict what's going to happen to the market moving forward. The point is, trying to spend so much time to speculate when a crash is going to happen might be a waste of your time. Instead, spending your time looking for opportunities that wouldn't have presented itself in previous years might be a better use of your time. Personally, for me, I like to stick to long-term investment strategies, which means that I'm holding a stock for over 5-10 years minimum through any ups and downs. I'm less concerned about market crashes, but more focused on how well this company will do long term. And right now, I think there are a lot of great opportunities to invest outside the tech market, and I'll be making a video on these in the future, so be sure to turn on your notifications. And with all that said, if you currently have a big portion of your portfolio invested into tech stocks, it may not be a bad time to start trimming down on those shares, because you'll be selling at extremely high valuations, and you can take those profits and put them into other growth and value stocks that potentially might have better opportunities in today's market. You'll still be able to benefit from future growth in tech stocks, but your portfolio will also be better positioned in the case there is an adjustment. Now, to sum it all up for you guys, I think tech can be a great investment, but do so with caution as things are definitely getting bubbly. And if you are going to invest, make sure you're confident enough to hold it through any dips that might be happening in the near future. I think you'll be able to buy high and sell higher in the long term for tech stocks, but I think you can buy low and sell high for other sectors in the market right now. Well, that's it for my very first YouTube video, and if you got it this far into the video, thank you. Be sure to check out my referral links below for free stocks, and make sure to give me a thumbs up, and I'll see you again soon.